Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover slow investor activity on the last day of the year, China's struggling economy and its future, impressive stock gains in 2023, the importance of early retirement savings, and the significance of key variables according to investor Martin Whitman.
The Chinese economy has been struggling to recover from the pandemic, and things are not looking great for 2024 either. After a disappointing performance in 2023, China's economy is expected to grow at a rate of 5% this year. While this may be higher than some other major economies, it is lower than what China is used to. The International Monetary Fund even called China a drag on world output. Residents of China are also feeling the impact, with only 52% of them feeling optimistic about their 5-year business outlook. This is the lowest level of optimism ever recorded. The country is facing numerous challenges, such as a property crisis, weak spending, and high youth unemployment. Additionally, China's population is aging, with the average worker age increasing to 38. 3 years in 2022. To make matters worse, some big manufacturers and investors, including Apple, are leaving the country. Foreign direct investment into China has turned negative for the first time since 1998. Various sectors, such as real estate and shadow banking, are also suffering. Experts predict that things will worsen in 2024, but there is still some hope for China to bounce back. The next few years will undoubtedly be challenging, but China's status as a major market gives it the potential to recover. In global news, China's Xiaomi has ambitions of building a car rivaling the likes of Porsche and Tesla. The Biden administration's Medicare drug price negotiations will face major tests in 2024. Boeing is urging inspections of its 737 MAX planes due to a possible loose bolt. On a different note, jobless claims in the labor market have jumped by 12,000, indicating difficulties for workers in finding employment. Global mergers and acquisitions have reached a 10-year low, dropping by 17% to $2. $87 trillion in 2023 due to higher interest rates and a subdued deal appetite. Will 2023 be another record-breaking year for stocks? Well, we're on the edge of our seats as the S&P 500 sets foot into its last trading day, just a tiny zero, 5% shy of a brand new high. Can you believe it? This year has been absolutely incredible, with major indexes showing off some jaw-dropping performances. And the best part? There's a flicker of hope that this rally will continue into the next year. Let's talk numbers for a moment. The S&P 500 has soared 6% in 2023, and the Dow Jones Industrial Average has had a respectable uptick of 8%. But the real star is none other than the Nasdaq Composite, blazing a trail with an astonishing 2% gain, making it the largest yearly increase since 2003. Oh, and we can't forget to tip our hats to the Magnificent Seven for playing a crucial role in propelling the Nasdaq to dizzying heights. But wait, there's more. Investors are buzzing about the potential comeback of bank stocks in 2024. Could it be their time to shine? Only time will tell. But keep a close eye on the banking sector because some folks in the know are expecting big things. So, what's the right age to start saving for retirement? Well, there's no one-size-fits-all answer to that question. Ideally, you should start as early as possible, but we understand that it may not be easy for everyone. In a previous episode, we discussed how saving $2,000 a month may not be feasible for someone in their 20s. Most people in that age range make around $38,000 a year, and after expenses, there may not be much left for saving. However, let's consider a different scenario. Imagine a 24-year-old web developer working for a US company, but living in a country with a lower cost of living, like India. In this case, even with an annual income of $38,000, they could potentially save a significant amount. If their living expenses were around $8,000 a year, they would have $30,000 left to save and invest towards their retirement goal. Unfortunately, not all of our subscribers are in a similar situation. For those of you in the US, it's still a good idea to start planning for retirement in your 20s. Even if you can't save $2,000 a month right now, start with whatever amount is manageable for you and increase it as your income grows. According to the Milken Institute, young adults should start saving regularly by age 25, especially if they're making above $50,000 a year. Assuming you don't have significant debt and your expenses are under control, you can save a considerable portion of your income at this age. In fact, a weekly investment of $100 in the stock market with a 7% annual rate of return can compound into savings of over $1 million by the time you reach 65. Financial service companies like Fidelity Investments often use 25 as a benchmark age when offering retirement saving guidelines. So if you haven't started yet, consider this your wake-up call to get on track for a comfortable retirement. Today's quote of the day comes from Martin Whitman, a renowned investor and expert witness. He once said, "Based on my own personal experience, both as an investor in recent years and an expert witness in years past, rarely do more than 3 or 4 variables really count. Everything else is noise." Now, let's break this down a bit. What Martin Whitman is essentially saying is that when it comes to investing or analyzing a situation, we often get bogged down by information overload. We tend to focus on countless variables, thinking they all play a crucial role. But in reality, Whitman suggests that only a handful of those variables truly matter. The rest are just distractions, noise. Think about it. How many times have we found ourselves drowning in a sea of data, trying to make sense of it all? Sometimes it's easy to lose sight of what truly drives success. By honing in on the few key variables that have the most impact, we can achieve greater clarity and make better decisions. So the next time you find yourself overwhelmed by a multitude of details, remember Whitman's words. Filter out the noise and focus on those few critical factors that truly make a difference. It might just lead you to a more successful outcome. That's it for today's quote of the day. Stay tuned for more inspiring insights.
In this episode, we covered a range of topics, including China's struggling economy, the impressive gains in stocks in 2023, the importance of early retirement savings, and the insightful perspective of Martin Whitman on the variables that truly matter in investing. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.